Welcome to Looking at the Markets. I want to show you the stocks that I'll be looking at for the coming week. These are daily candlestick charts provided by finviz.com. Let's start with the stock and the company that people are talking about right now. It is SIVB stock, but it stands for SVB. Silicon Valley Bank is the more commonly known name. I think it's officially SVB Financial. And yeah, this was not a stock that I paid a lot of attention to until recently. If I was going to trade banking stocks, usually it would be something like Bank of America or Citigroup, JP Morgan, whatever. But this apparently was a very, not the biggest bank, not on the level of Citigroup and JP Morgan or anything like that, but a pretty big bank to go under. And people are talking about this one. And you know what? Just because this bank failed doesn't mean that the whole banking sector is going to collapse. I don't want to get too far away from charts in this video, but I think there are opportunities in some bigger bank stocks. All right. This chart is not even really worth looking at because the company is failing, so I wouldn't touch this with a 10-foot pole. Even if it went down to $10, I wouldn't touch it myself just because of the fundamentals, which are lacking. But then you look at the collateral damage over the past couple of days or several days. And the example I'll use today is BAC, Bank of America stock, which seems to be, well, it went down at one point for a hot minute. On Friday, it went down to the support level here of $30 per share, give or take. You can call it $29.50, but really like 30 is where the support seems to be going back a year. And it bounced off of 30 here very nicely, bounced off of it, $29.50 or 30 here, and came down to it again and then bounced off of it on Friday and almost closed flat. And so this is a great example to me of collateral damage. This thing didn't need to collapse just because SVB Bank, Silicon Valley Bank, was over leveraged on fixed income securities, bonds, government bonds. Just because they were over leveraged doesn't mean that Bank of America over leveraged itself, or Citigroup, whatever, JP Morgan, whichever one you want to look at. So I think there's a big opportunity. If this thing comes down to this level here, $30, $29.50, pick your level, I think this would be pretty good. So that is my pick of the week already. We'll move on to other things. I don't want to spend too much time on one stock, but that was my point with that one. Now moving on to technology, AI, machine learning, C3 AI, and AI is the ticker symbol. And for short-term swing traders, that's what this is for, because this is a very important level here at $21 for AI stock. It was resistance here, and then it became support. That often happens. And there are no guarantees. I mean, this could easily fall below $21, but look how much support there is in the short term. Now, longer term, yeah, this thing looks like it went really high. And so long term, I would want this to come down more. I'd want it to come down to this area. But for a short-term swing trade, I mean, you could have just rinsed and repeated this thing over and over. Comes down to 20, you buy it. Comes down to 20, you buy it. So came down to 20, 21, let's say. Came down to 21 on Friday, and it didn't slice down through it on heavy volume or anything like that. And so this could be a swing trade. Of course, you have to make your own decisions, do your own due diligence. Don't buy something just because somebody in a video likes it, right? Disney stock. DIS is a ticker symbol, and it's coming down to an important support level. Look how many times Disney stock bounced off of this level, which is 92.50 if you want to be exact. You want to call it 93, that's cool. You can round if you want to, just bouncing off of it again and again. Head fake below it, but then it popped way, way above it, right? And so came down on Friday to that level again. This is actually looking pretty good too. This could be my pick of the week. I would probably choose Bank of America, number 1, Disney, number 2. These are looking pretty good. We'll see where they are on Monday, of course, before any decisions are made. Walmart stock, WMT. So here's one that had a resistance level at 140. WMT Walmart stock, and then that became support. And now, broke down below it for several days in a row. Could be a head fake. These things happen. But until proven otherwise, this is resistance here at 140, so I would be cautious. I'm seeing some support here at 130 and then down here at 120. So what somebody could do is scale in, maybe. Buy a few shares at 130, buy a few more at 120. That's a very mature way to invest, is to not put everything in at once. Just buy in partial payments, or scale in, as they say. Amazon stock, AMZN. This is at a good level, I would say. 90. Yeah, and I know it had faked below 90, but then popped all the way to above 110. So, yeah, 90 is pretty good. Not bad for Amazon stock, considering how much higher it's been. 140, above 150 even a year ago or so. Yeah, this is pretty good. I know tech stocks are under pressure. They have been for a year now. But I'm okay with that. That's where opportunities come from. If you believe that the company can recover, of course. You want to check the fundamentals and financials, not just the chart. Google stock, will make it GOOGL for this one, for Google, Alphabet, I should say. Rising support level, I like that. And not going vertical or parabolic, but a gradually rising support level. Yeah, I like that. I do. And you could say that there's a symmetrical triangle. Okay, fair enough. Rising support level and declining resistance level. So that's something to be aware of. And it looks like there's former support here at 105. And that support, it's a running theme today, became resistance, didn't it? Yeah. So what you could do if you wanted to buy some Google, Amazon shares and then start selling them at 105, it's a possibility. Not huge returns, but hey, you know what? You don't always have to hit home runs and grand slams. You can hit doubles and singles sometimes, and that's okay too. And Home Depot, as we can see, there is support for HD, Home Depot stock, at 270, and it's not there yet. Over here, when it was 340, the idea of buying at 270 seemed preposterous, but look, we're almost there, getting close. We're in the 280s already. So if it comes down to 270 and doesn't slice down through it like a falling rock on heavy selling volume, right, there's some support here for sure. Yeah, so that could be a good price. I'm watching, I'm waiting. So yeah, I'd say BAC number 1, DIS number 2 for this week. And you don't have to listen to the fear mongers. You don't have to listen to the people who are telling you there's going to be a run on the banks like it's the Great Depression of 1929 all over again. Just because the weakest link in a chain fails doesn't mean that everything has to collapse. Sometimes the system has to get rid of the weakest links. No offense to SVB Financial or Silicon Valley Bank or whatever, but sometimes this has to happen, this type of thing. All right, so be careful out there, invest wisely and maturely. Thanks a lot. I will talk to you again soon.